seen a fall of about almost 2.5%. In fact, most sectors are in the red, barring little bit of a relative outperformance from IT, with Infi and Wipro taking the lead right now. Then we also welcome on board Ashi Anand and get in his thoughts on the markets. Ashi, hi, afternoon. You track IT pretty closely, and tech, I should say. Do you think that's one sector which will manage to sort of wade through the storm that we're currently seeing? Because it is showing some sporadic outperforming moves.
So firstly, thanks so much for having me on the show. And we really need to differentiate between IT services and, say, tech, or what we like to call digital or digital platforms. So if I just focus on digital platforms first, digital platforms is really the longer term story around value migration that's happening from traditional businesses towards digital forms of transaction. Now, this could be across payments, it could be across food, it could be across transportation, etc. Right? The whole shift towards digital platforms in India is honestly a theme that we believe to be very attractive from a longer term perspective and really doesn't get too impacted by whatever's going on right now. IT services, and this is kind of separate to your kind of creating software for kind of global demand. This is a space which has actually been quite subdued for an extended period of time. And I think what markets have really been waiting for is some kind of an uptick in demand. With US interest rates starting to kind of actually reduce, there is kind of hope that as interest rates come down, the economy and businesses should revive, and that should actually help boost IT spends. Discretionary spends have been quite weak for the last year and a half. Now, as this comes back, these are very high quality companies, strong cash flows, very high levels of corporate governance, etc. It clearly is kind of a space that we believe has room to grow. But in order for this to be a sustained rally, you do really need the whole economic and business recovery cycle actually taking place in the US and across Europe.
Right. Hi, Ashi. This is Cheryl also joining in the conversation. So apart from this entire theme that you feel that the digital growth story of India is here to only stay and in fact grow and prosper going ahead, apart from that, which are the sectors that are looking attractive to you?
I think the one other kind of core space is really financiers. We are very, very comfortable in terms of financiers because if you just look at the market construct, you have one segment of the market where there is very strong business momentum, but these stocks have actually run up quite a lot over the last couple of years, and valuations are arguably pricing in a lot of this optimism. You have other segments which have actually failed to actually participate, but business momentum is actually lacking. Financiers is a space where you still have growth, which is in the healthy kind of teens, even touching kind of 20% kind of levels. ROEs are still decent. Asset quality is holding up reasonably well, with the exception of a few pockets. And you are being able to still buy these at valuations that are fairly attractive, both on an absolute basis and as compared to historical benchmarks. So this is a space which we believe clearly does have a lot of merit. Now, apart from financiers, we also like other spaces in BFSI. We clearly like capital markets. We believe this has a very clear growth runway, as the financialization of savings in India is still a nascent kind of trend. And as India develops, this really has a large amount of room for growth. So we like wealth management firms, we like asset management companies, insurance. We actually have exposures across each of these themes. Now, apart from that, I think capital formation, and I'd include real estate, I'd include capital goods. We need to be a bit selective at a stock level here because some companies have really run up quite significantly and there is froth in certain segments. But that said, if you are careful about the stocks that you're looking into, given the sheer scale of business momentum and the kind of recovery you're seeing in capital formation spends in India, this is a space that we believe can continue to do well.
Right. Okay. Let's just take stock of what else is happening in the market right now. We're closing in fact, now at the.
Let's put the spotlight exactly what is happening in the markets more closely, given the fact that we are actually near the day's lowest point coming in for benchmark indices. We did slip below that 25,000 mark at one point in time. You have the advanced decline ratio very much skewed in the favor of the declines as we speak. But you have ONGC among the ones when you talk about the crude plays. That's the only one that's holding on to gains about 1%. Apart from that, you have Reliance Industries that's caved in. You have the OMCs that are under pressure. You have the oil paint stocks, or for the matter of fact, tire stocks also that are under pressure in trade today. But Ashi, that brings me to my next question to you. What's your take exactly what is happening in these companies which are beneficiaries of or other are dependent on crude oil as a whole? What's your take on these sectors? How have you looked at them, especially the OMCs for the matter of fact?
So this is arguably a really difficult call to take at this point. And I think we really need to understand what's happening in the Middle East and what the kind of current market concerns are, and which is where you're seeing the pressure on these stocks. The whole Iran-Israel kind of conflict has been escalating for some amount of time now. And with the recent bout of missile attacks by Iran, the whole focus is really going to be on what is going to be Israel's response. There have been certain soundbites coming both from Israel and out of the US. And these are just kind of rumors at this point in time. But if the Israeli response were to be something where you are going to be targeting either nuclear reactor facilities of Iran, or you were to go after either the oil fields or oil refining of Iranian oil refining assets, that is something which would really escalate the conflict quite significantly. And the reason this becomes extremely important is Iran really has the ability to create a blockade on the Strait of Hormuz. And this is extremely important from a global oil trade perspective. If it were to escalate, right, and now you really don't know, from what we understand, the US is actually putting pressure on Israel to ensure that you don't go after oil assets because you want to prevent this at all.
Sir, then you can thank him.
But there is basically this effective kind of risk of if the situation were to escalate and there was to be some kind of a blockade, you could then go into a period where oil prices could move well above the kind of 80. You've already seen a 70 to 78 rise. If you start moving above 80, 85, a lot of these companies really, their margins get badly impacted. And that is really the whole risk. And I think until you don't have clarity around how this whole Middle East tension is going to play out, you probably want to stay away.
Stay away from these counters, given the fact that you don't know which direction the crude will head going ahead, and also higher crude oil prices would dent the margins for these OMCs. But on that note, thank you so much, Ashi, for joining us on ET Now and giving us your view on various sectors on ET Now. And as
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.